Yes, the central bank has actually been on an aggressive mop-up drive with daily auctions. This week, with today's auction, they have already mopped up about 123 billion from the market. This is largely as part of its strategy to manage price stability in the FX market. And the effect has actually dovetailed to the money market, where we've seen rates inch up as high as 65% for OBB and as high as 70% for overnight rates.
I'm just wondering, quickly on the OMO auction, what rates did we see?
They've maintained selling 11.9 at the short end, 13.5 and the middle end. At the long end, they've remained at 15%.
Okay, now for the money market rates, we're looking at 60, 70% for the open buyback and, of course, the overnight rates. Could it go any higher? Is there room for an upside?
There will be room for an upside, especially if FX demand continues. However, there's FAC being expected during the course of the week. FAC will be next week. But okay, during the course of the week, we have some maturities that should bring in about close to 500 billion into the market. We expect this to push rates down, maybe towards 20%.
So at this point, should we expect investors, perhaps institutional investors, to continue to play at a short end, just where they can just go in, and exit quickly, just watching to see how the CBN will, plans to continue to proceed with the state of liquidity at the market?
Yes, investors will continue, but there's also the demand for higher premium on the naira. That's why you see most of the interest is coming at the long end, where you have 15%. If you look at the OMO, there was actually, surprisingly, there was no sale at the middle bucket. That was the 197 day. There was actually no sale there, which was a bit surprising. But again, the main thing we've seen is most of the interest has been at the long end of the bucket, where they are going at 15%. Then if you look at the fixed income market, we've seen rates, yields go as high as 17%, as bankers and most people have tried to sell off some of their assets in a bid to shore up their liquidity position.
The 17%, that's quite on the high side. And I've been asking fixed income traders and analysts this question. If they think that we could see this 17% breached, could we go as high as 17.23? I know this is ambitious, but 18%.
17 is where we think it will be for now.
Okay.
If anything happens at the OMO end for the central bank to push higher, this might have further effect. But the main thing has been the OMO, and there was a special OMO last week as well. So there's a lot of liquidity tightness. So as I said earlier, players are actually trying to sell off some of their holdings and also looking for the opportunity to reinvest at higher levels, as everybody expects interest rate direction for now is on the upside.
Okay. Now for the FX, we've seen some naira volatility. We've seen the central bank stepping in to just calm the tensions of the markets and ensure that there is adequate supply. But we're still seeing a bit of pressure at the I&E window. What can you tell us in terms of how it traded today?
I&E window, there's been a lot of, you want to look at it vis-a-vis the levels. We're seeing levels of about 700 million daily volume around June, July. But what we're seeing nowadays is about 200 to 300 million. So it shows that volumes have dropped, not because there's no demand, but again, if you look at it, capital flows have reduced significantly. We're just looking at Q3 against Q2 figures, and we saw capital flows have dropped by about 48%. So this definitely has had impact in the market. There's a lot of liquidity queuing up for FX, and that has put pressure. But overall, the central bank has been up to the task. They have intervened. They've come to the market to find out if there are any unmet demand. And overall, we expect it to remain capped. The highest level we've seen this week is 366.4, and on the low side, we've seen 364 levels. We expect it to remain within that range into the year end, basically.
Okay, let's talk about some external factors that could impact on the market. As you know, the U.S. Fed will be meeting next week, and of course, everyone I've spoken to has said that they're expecting the Fed to hike rates now. Talk to us from your perspective how you see this impacting on the market, especially emerging and frontier market like Nigeria.
Yeah. There's already more or less, despite what's coming from the political end, the presidency is not of the view that the Fed should hike, but the Fed has remained steadfast in its course. If they hike next week, that will take their rates to 2.5%, and that will be the fourth hike this year alone. This doesn't bode well for emerging and frontier markets like us, because it gives risk-sensitive investors alternatives, being better yields coming out of the U.S. The only way we would expect central bank to respond is to also begin to push its own rates higher, and we hope we'll be able to trap these funds. Most of the outflows, like we have observed, are not just due to concerns about political risk, but more of the normal year-end cycle. And some of these investors like to take profits at year-end, and they should be back next year.
Okay.